Alex, can I become a millionaire from trading? What is this day trading stuff? I see it everywhere. Can I get started right now? And the answer is yes. In this video, I'm gonna be showing you how you can make anywhere from $1,000 to $1,500 a week as a beginner day trader. I get these messages asked every single day on Instagram, and I'm going to answer all of them in this video. This is going to be a full day trading tutorial. I'm gonna show you what is day trading. I'm gonna show you the advantages and disadvantages. I'm gonna show you how to enter a trade, how to get out, how to withdraw, how to do everything, literally all in one spot. This is a video that I wish that I had when I started day trading. This would have saved me hundreds of hours and thousands of videos that I looked through YouTube to try and figure out this whole day trading stuff. In this video, everything is gonna be in here. So first of all, what is day trading? So let's point out the advantages and then let's point out the disadvantages. And this way you can see if it's for you, because if it's not, then you just save yourself some time. So what are the advantages of day trading? And I can tell you right now, there's a lot. First things first is fast execution. So you enter the market pretty much immediately that you want a trade. Let's say you want to enter a position Monday morning, you can do that. Let's say you want to enter a position Tuesday afternoon, you can do that. You can enter a position basically whenever you want, because since you're day trading, the market's gonna give you opportunities throughout the whole entire week. The next advantage is that it requires some patience, not extreme amount of patience like swing trading, but it does require a good amount of patience, enough for a human to be able to work on it and get better. And it can almost work to your benefit. This way you grow and you become a better trader. It is also accessible to anybody across the world. You can literally be living in the United States, Latin America, Africa, Europe, Australia, Japan, China, anywhere with a computer and Wi-Fi, you're able to be a day trader. You can get a solid opportunity literally every single day. So that's the whole reason of day trading. You can trade every single day. Now, does it mean that every single day there's gonna be an amazing opportunity, but the opportunity is there to trade every single day? There's a lot of day traders to learn from, but this can almost be a double-edged sword because it can almost be information overload. But more on this when we head to the disadvantages of day trading. The next benefit is that you really don't have to be in front of the charts all day, because if you're a day trader, you only have to be in front of the markets a very specific time, only a specific time zone that you want to day trade. And then that's it. You can enjoy the rest of your day. You can work on other habits in your life and get better. So it doesn't require a lot of attention and strict hours for you to be in front of the computer if you want to be a day trader. Another great benefit is once you catch the trade, it's pretty much it. You're done. You let the trade hit your stop loss, or you let the trade hit your take profit, which is amazing because this way you can enjoy the rest of the day. You don't have to be glued in front of the computer. Risk to reward ratio is another great one because you are having a minimum of a 1 to 2 risk to reward ratio. Now, this is very key and important because you don't have to have a positive win rate in order to be profitable if you have a positive risk to reward ratio. This is something a little bit more into detail, but I'm gonna get into that later in this video. But risk to reward ratio is key because you're gonna become more profitable as a day trader than you can as a scalper due to positive risk to reward ratio. You can have the benefit of only day trading once or twice a week. You don't have to trade every day, the opportunity is there. But if you get a good trade, you only have to trade once or twice a week. And these are just some of the small advantages that day trading has. So how much money can you actually earn from day trading? And the answer really depends on your account size. And this number can vary, depends as well as how much you risk. So let's put an example. Let's say you have a $1,000 account. And let's say you risk 2% per trade and you end up the month with a 10% profit. Well, there you're gonna only make $100 because $100 is 10% of $1,000. Now, but you take that same percentage to now, let's say $10,000. So let's say you do the same thing, $10,000, you risk 2%, and throughout the whole month, you make another 10%, but on that 10,000, now you've made $1,000. Not super attractive, but the percentage is what matters. Because now if we take that same 10% principal to, let's say, $100,000, and then you risk the same 2% of the account, you scale up 10% throughout the whole period of the month. Now you have made $10,000 in 1 month, risking 2%. Now, this is extremely key because this shows you how we're using the same exact percentage, but on a different account size. And you can obviously seek funding. There is hundreds of funding companies out there. There's many different evaluation processes to do. And there's people ready and eager to throw money at you and invest in you as a day trader once you are profitable, because you're gonna basically make these people money. You just have to do a profit split on the money that you make them. That's how I got to the position that I am today. I got funded and I made $28,000 in a month, and I had a 70-30 profit split with that investor. And basically I got 70% of the profits. That person got 30% of the profits, and we were very happy. So how much money can you earn with day trading? There is no cap. There's no limit to what you can make with day trading. It just depends how well are you with that skill set. The better you are with the skill set, the more money you can seek, the better profit split you can have in your advantage, the more money you're going to make. But it all starts with the principle of the skill set. Once you learn the skill set, the money will come by itself. I can guarantee you that, and I'm living proof of that. How much money do you need to get started into day trading? And the answer is whatever you're willing to put in. Just already picture that money that you're putting in as a loss, because this money that you first deposit in, it's going to require some hard lessons. It's going to require risk management, mandatory stop loss, mandatory trade management, mandatory risk to reward. It's going to require a lot for you to actually understand what trading is. And all of these things is going to be learned in your first deposit into the account. So what is the right amount for you to get started? Well, what is the right amount that you're willing to lose from the beginning? What is an amount that you have no emotional attachment to? Everybody has a different financial position. So if you are in a better position than others, put what you are willing to risk. If you're not in a better position than others, then put what you're willing to risk. Don't compare your beginning to my beginning or my beginning to somebody else's beginning, because we all start from a different point, but we all start with the same base, and that is knowing nothing. And the only way we know this stuff is by the lessons that the markets are about to give us, and those lessons end up costing us money. So I would start with something very small. Could be as small as $100, $200, something that's not significant to you, so you're ready to lose it. You learn those lessons, and then you come back and deposit again, and then you learn from your mistakes. Or instead of depositing into account, you can get a funded account and try it that way. But I personally don't recommend that, because at the beginning, the evaluation processes, they have very tedious rules like the drawdown and all that stuff. So I think it's best if you just go and deposit into your own account, and then you start from there where there's pretty much no rules. You make your own rules. So what do you need exactly to get started day trading, right? What are the actual keys? Do you need a book? Do you need a specific keypad? Do you need a crazy monitor? Is there something special that you need to get started into day trading so you actually start making money? And the answer is no, you need nothing special. Everything that you're watching this video through right now is enough to become a profitable trader with. So the first things first, you need a PC. You need a laptop, you need a computer, you need something so you can actually see the charts in, because you're obviously trading the charts. Next, you need a TradingView account. You need a MetaTrader account. You need a trading strategy, a trading plan, and extreme discipline. And all of these things I'm going to explain into this video, especially how you create those first accounts, how you create the TradingView, how you create the MetaTrader. All of that I'm going to teach you in this very video, which took me a lot of time to actually understand what I needed versus what I didn't need. So now I'm going to actually show you how the day trading charts look like. Now, don't get intimidated. Don't worry. I'm just going to summarize it very, very fast so you get a feel of it and you understand what the day trading charts look like. And then after I explain it in a very brief summary, it can take 30 seconds to a minute. Then I'm going to go into detail on every single aspect of the TradingView account, the candlesticks, the lines, everything that looks like a lot of information at first. I'm going to break it down. But first, I just want you to get an awareness of what the charts look like. So don't get intimidated. I'm going to give you guys a visualization of what to expect when I break it down as soon as I explain it. So we're here in TradingView. This is where we're going to analyze our trades every single morning, every single night. Right before we take a trade, we always have to see it here first. So what I'm going to show you guys is what TradingView is, how to actually see a day trade, and how to spot it, whether it's going up or whether it's going down. And then after, I'm going to literally explain what all of these things are here to the right. What are these things that are moving up and down? What are all these tools to the left? What are these buttons up here? Literally everything that you're seeing in front of you right now, I'm going to explain to you very, very, very soon, because I know it can look very intimidating at the beginning. So first things first, when you enter any market of day trading, you need to see if it's going up or it is going down. This is also known as if the price were to be bullish or if price were to be bearish. This is very key, because if price is bullish, you're buying. If price is bearish, you are selling. In this example right here, it doesn't take much, knowledge to realize that price is headed to the upside. You guys can see here how the market structure is actually moving to the up. And when I mean market structure, that means that this market is consisting of higher highs and higher lows. These higher highs and higher lows is what identifies us in the market to be able to tell whether we are bullish or bearish. In this example right here, this is what is called a level of a higher high right here. And then this is a level of a higher low. These lines right here, these sharp rejections in price, those are also known as elbows. And this is what identifies us that price doesn't like that area and it's rejecting it. So as you can see, price right here rejected this area. If you look a little bit to the left, what do you see? That price rejected that area as well, but to head to the downside. Now, when we are above it, it shows that we're going to reject it to the upside. So this right here is a solid area of market structure. So every single point that is a high point, it's a higher high and then a higher low. So this right here would be a higher low. Then this point right here would be a higher high. This point over here, this would be a higher high, and then this would be a higher low. Now, keep in mind, it is literally impossible for you to have a bullish market structure without a higher high or higher low. If you don't have a higher high or higher low, it is impossible to have a bullish market structure. And also, it is literally impossible for you to have a bearish market structure without a lower low or a lower high. To also see it very clearly, you can see right here, this, we would also use it as a line. We would mark off here, higher high, which is HH, and then the higher low would be the last structure point right here. So we would just get this line right here, and then this would be the higher low. So as long as price remains in between these two zones, price is still bullish. Let's say if we were to do something like this, that we then continue to head to the upside. Now we have a new higher high. Why? Because we have broken above the previous high. So this is the new higher high. So we move this point right here. And then the last higher low, it moves because this is no longer the last higher low. This is the last higher low right here. And as long as price keeps doing this, we keep moving the higher low and higher high points. So it keeps heading to wherever it decides to head to. So for example, here it broke again. This is the new higher high. This point right here turns into the higher low. So this is how you identify whether the market is bullish or bearish, which is the first thing that you want to do. And it's actually one of the most important things in any strategy. Next thing is, where are you going to be buying? Where are you going to be selling? You're going to be buying or selling at an area of interest. So what is an area of interest? How do I spot one? How do I know if it's a real one? How do I know if it's a fake one? Very simple. An area of interest is a spot where it has more than 3 touches. So more than 3 touches means that price has gone to that area and it's rejected it more than 3 times. So this point right here, you see how it was under and it rejected it. So this is point 1. You can see how this point right here, price came to it and then it rejected it. This is point 2. And then you can see right here how whenever price got to this point and then it rejected it, that is point 3. Now, doesn't matter if it rejected it from the downside 3 times, rejected to the upside 3 times, as long as price rejects this point right here, that is what we want to see. So a perfect area of interest that we can see right now in price would, let's say, be this point right around here. Just for example's purposes, this would be an area of interest because we have 1, 2, and then 3 touches. So this would be an area of interest. Price has retested that area, and then this is where we would be looking to enter the trade. This is where we would use our risk to reward tool. This literally tells us how much we're going to lose and how much we're going to gain. That's what I said earlier. Remember, key with day trading is risk to reward, and that's exactly what this tool is right here. This tool shows you what you are risking, which is in the red, versus the reward, which is what you're gaining, which is in the green. And this right here measures the amount of points, also known as pips, in your stop loss, and then also the amount of points or pips in the take profit. Also the risk to reward ratio, which is what I mentioned to you guys, which is one of the most key important things, tells you that right now you are risking $1 to make $1.45. Obviously, this is if you're risking $1. If you're risking $100 to make $145. This is not a good risk to reward. You need to have a minimum of a 2 points risk to reward ratio. Now, again, this might be information overload, and it's not. Trust me, I'm going to explain everything now in great detail. But I just want you guys to get a feel of what it looks like with the day trading charts and everything. So we're going to take a couple steps back now, and I'm going to explain everything in great detail. So let's take the first steps. Let me get your charts to look just like mine, because as soon as you create your TradingView account, it's not going to look like my charts. So let's do that right now. So you're going to go over to TradingView.com, which is where pretty much I think 99% of the traders in the industry watch their charts. We're going to create an account right now, and then we're going to put your TradingView exactly as I have mine. So you can see the charts with the same clarity as I do. So you're just going to head here to the top right section, right where it says get started. As soon as you click get started, sign up for the $0. You do not have to sign up and pay the subscription. You just simply sign up. So it's going to give you an option to sign up with your Google account, Facebook, X, Apple, all that stuff. So to sign in however you want, and then as soon as you sign in, this is what's going to pop up. So as soon as you sign in with your Google account, it's going to ask you to create your name. So this is where I'm just going to put, for example, this name, we're going to put fxalexg YouTube video. So I don't want to receive any offers, but I have read the terms and conditions. So as soon as you sign in, it's going to give you the option here to then put your name. For this example, I'm just going to put alexg 1 through 6. I have already read the terms and conditions. You have to do that very simple. And you just simply click next. And then here it's going to ask you to now have a subscription. You guys don't need this right now. This is not needed at all. It's just extra features. I think I spent almost 2 years without paying the subscription at all. The only reason you pay for the subscription is simply just to not have the ads. So once you're here and you already have your account, you're going to simply go to then markets. You're going to hit the overview button. And then you're going to see how all of these indices, stocks, futures, and then forex and cryptos pop up. So you can click forex, you can click euro USD. As soon as you click it, then you can click on see super charts. And this, as soon as you click this, it's gonna take you to the actual charts that you were just looking at. And right off the bat, you can see how this doesn't look like mine, right? Why does this look uglier? Why doesn't this look as clean? That's simply because over the years, I have analyzed my charts so much and I've figured out the correct pattern on how to have them clean. So first things first that you want to do is you want to remove all the noise. You want to take off all the stuff that don't matter. So for example, this volume down here, you're simply going to double click it. You're going to go to visibility, and then you're just not going to have it visible at all. Not on the weekly, not on the daily, not on the hours. You just don't want to have this visible at all. And you simply just put, okay, so that's gone. So now you're only focusing on the charts. We're gonna head over here to the watch list. And as of right now, we don't trade indices, we don't trade stocks, we don't trade futures. So why do we need to have all that noise? Less is more when it comes to trading. So you just wanna click this little X button right here, and then you're gonna remove all of these pairs from your watch list. If you by accidentally exited out on the forex pairs, don't worry, I'm gonna teach you how to add it back. It's very simple. So you're just gonna exit out on all of these stuff here that are not necessary, futures, gold, silver, all that stuff. And then we're gonna also remove the cryptos, right? So now we're only left with the forex pairs because again, remember, less is more in this industry. Now that you have this cleaned out and you're only focused on the currency pairs, you have to make sure you're on the right server. What does that mean? Well, that is this right here. You guys can see how this is the euro and the dollar and how we are on the daily time frame, but we are on the server fxcm. So the fxcm server, you can see how it has gaps. You see right here how this has a gap. You can see how this has a gap, how this has a gap. And this gap can be very confusing at the beginning because a lot of traders, they don't know what to do or with that information. So this is where we're simply going to just type on the keyboard. I'm just gonna put euro USD, and this is going to pop up. This is the server that we are currently on right now, fxcm, and it has gaps. You don't want the gaps. You want to be on euro USD, but you want to be on the OANDA server. So I'm just going to tap on this really fast, and you can see how all of those gaps were filled. You can see how clean it looks. You can see how there's no gaps in this market. So if I go back and I click this server right here, you can see how then it goes back to the fxcm server and there's gaps, versus if I type up euro USD once again, and then I put the OANDA one, then there's no gaps. So you want to have all of the markets that you're looking to trade on the OANDA server. Now, how do you get that to this section here? Very easy. You simply come here and then you flag it as red. So when you go up here to your watch list, you go to your watch list that is red, and then boom, now the euro USD with the OANDA server pops up. Let's say we want to add another pair, GBP USD. We go here to the OANDA server, you tap on it, click up here, the red flag, boom, pops up here. That's it. That is yours forever. Whatever you do here is gonna literally stay here for life. So now that we've added this currency pair to our watch list, you can go on and you can add as many currencies pairs as you want. You can add the main ones, USD JPY, GBP JPY, literally any currency pair that you want. Pretty much just come in here, type it up, and then you just add it. Very easy. Some people, they only have one, some people have 2, 3. I personally have, I think it's 13, 14, 15 different currency pairs that I added over the time, but that's not the point right now. What is the point right now is you want to make your charts look like mine. So before we actually get into the charts, I want to make sure that you have all of the time frames that you need. So you're going to click up here this D, because this is the 1 day. So meaning every single one of these candlesticks are 24 hours. As you can see, this candlestick right here has about 21 hours left before it closes. So this was yesterday's candlestick, which was November 1st. This was October 31st. This was October 30th. And how am I seeing that date? You guys can see it down here, literally all the way at the bottom. You guys can see how it says the date right down there. It changes as I go through the candlesticks. So now you want to hit this little D right here. And these are all the time frames that pop up. You do not need all of these time frames. Less is more. Keep that in mind. So the time frames that I use and have made me successful and have gotten me these type of profits or even these type of profits is by simply using these time frames right here. You do not need to add any other time frame. It's going to be the 15-minute, the 30-minute, the 1 hour, the 2 hour, the 4 hour, the daily, the weekly, and the monthly. So what you want to do is you want to put a star over those time frames, because what that does is that as soon as you exit out of here, notice how all of these time frames have popped up. So now, no matter where you are, you can just simply tap here, and now you know you're on the 4 hour, you know you're on the 2 hour, you know you're on the daily. Everything is very clear because all the time frames are up here together. Next thing is you want to make sure your candlesticks look like mine, right? So let's actually get into the charts. So you just double click this. You want to make sure the bodies of the candlesticks are black And the way you get there is by clicking the candlesticks 2 times. And I'm sorry, the bodies of the candlesticks, you want to make sure that they are blue. So if they're headed up, you want them to be blue. If they're headed down, you want them to be red. The borders, they have to be black on both of these right here. And then the wicks, you want to make sure that they are black as well. So you can just focus on what matters, which is the actual candlesticks of the price. Next, you want to go to, I think it is canvas, there you go. And you do not want to have any horizontal lines. So any horizontal or vertical lines, simply just make them white, get this one and make it white. So now you notice you have a beautiful clean chart that all you see is price action. You don't need to have all those lines in the back. You don't need to have a watermark because I don't know why people like having the watermarks in the back. I feel like it just covers price up. Because let's say you're looking at price like this, you literally can't see price because of the watermark. If you want to know what pair it is, simply just look to the top left corner, or look up here, or look over here. It's so many places that you can see the currency pair that you don't need the watermark. That's the last thing that you need. So if you want to remove a watermark, come here to canvas and you just exit out the watermark. So as of right now, your chart is looking exactly like mine. You have the same color candlestick, the same wicks, you have the time frames, you have the server. All you're missing is now the actual strategy and many more things, right? But let me actually hook you guys up with the actual tools as well. So the tools that I use are very simple. You can come to here and you're going to see a bunch of extra stuff that you don't need. It's very unnecessary. You only need a certain amount of stuff. And this is what you need. You're going to need a horizontal line. You're going to need a head and shoulders patterns. You're going to need a long position, a short position. You're going to need brush. You're going to need a rectangle, you're going to need a circle, and anything that you need, you simply just put a star on it and it's going to pop up over here. You're going to need a T. This T is so you write a text message into your box. And then one last thing that I forgot here, it's going to be your path. This path is very key and very important. This is all that you need from everything that is in here. You do not need the cipher pattern, you don't need the ABC pattern, you don't need the triangle, the Elliott, the Fibonacci, you don't need none of that stuff. All you need is market structure, risk to reward ratio, and a nice area of interest. And these are all the tools you are going to need to succeed with trading. And I'm going to teach you how to use every single one of them in this video, because if you use them right, you can capitalize off of it. If you use them wrong, well, then you obviously won't make any money trading. So let me explain to you guys what every single one of these tools are in this toolbox bar. Now this toolbox bar, you can move it around, you can put it anywhere you want. Don't be scared of it. It's not scared of you. You can literally hide it, put it wherever you want. If you don't want to see it, simply just click this little star and it disappears. If you want it back, it's going to pop up wherever the last time that you left it. So if you want to move them around inside here, you simply just grab them and then you can also move them inside here. But for right now, let's start off with the actual horizontal ray. So you can just tap it and put it anywhere you want in the chart. You can move it up, you can move it down. Once again, you don't have to be scared of it. It's not going to do anything to you. You could double click it, change the color. It could be blue, it could be black, it could be yellow, it could be orange, whatever color you want. I always recommend to go black so it's the same color as the bodies. And I would also recommend to not have it too thick. I would recommend to put it as thin as it can. So once you click it, click on the color, you put it black, you make sure you put the thickness, the thinnest line. This way, when you line up price, it gets to a very precise point, versus if you were to have a big block like this, it just looks very choppy. It doesn't look that clean. So the slimmer the better, because that's what we're going to use with the actual box, and we're going to get into that in just a second. So the second tool that we have is the head and shoulders pattern. Now, how do you use this? Where is there head and shoulders patterns in the chart? I can't find it. How do I know it's a real head and shoulders? And as of right now, and right in front of you guys, there is 2 head and shoulders patterns, literally right in front of you guys right now. Might not look like this. It might look like an inverted head and shoulders, which actually looks a little bit different. Looks like this. And I'm going to give you guys a minute to try and find it. So pause the video and try and find the head and shoulders pattern in this market. If you didn't find it, all right, let me show you where it is. So this is why they call it a head and shoulders pattern, right? Because it has a left, the head, and then the right shoulder, left, head, and the right shoulder. So this is a reversal pattern. This happens at the top of a trend, and then this happens at a bottom of the trend. So if price is moving to the upside and it's going to now reverse to the downside, usually what happens is that at the top of a trend, it forms a head and shoulders pattern, where then it does this formation. And then after this formation, what it does is that price now starts going to then the downside. It is a reversal pattern. Same thing as, let's say we reach a bottom of price, Then price decides to do a reversal pattern, which is known as the head and shoulders. And this is where it decides to then head to the upside. If you guys can see, this is the head and shoulders pattern right here. Simply following what price has done. Left, head, right shoulder. If you guys want to know more about reversal patterns and other ones just like this left head and shoulders, click this link right here. And there's a video where I explained everything about reversal patterns, head and shoulders, double bottom, spinning tops, engulfings, everything when it comes to the best reversal patterns that I use in the markets that help me generate amazing numbers when I trade. So this head and shoulders patterns right here, we can actually see it right at the bottom of this market price right here. Now, don't get mad if it's your first time seeing it and you're not actually able to notice it, because it's very difficult at the beginning, but once you see it, you almost can't unsee it. It's like, where's Waldo? Once you see Waldo, you can't unsee Waldo. You see here, you have left, you have the head, and then you have the right shoulder that has formed right here. So if I were to get this and I were to just move it to the upside, you can see the clean head and shoulders pattern. And patterns like this are literally everywhere. They come in all types of sizes and shapes. You can see a very large one right here, left, head, and then you can see the right shoulder. And there's many different ways how you can spot it and use this to your advantage. So this is just a tool, and we're gonna later down the video use it to actually enter a trade and make money trading with this pattern. But that for right now is the head and shoulders pattern, how you can spot it and how you can use it as well. Next is going to be the risk to reward ratio tool. So you're going to have the one for buys and you're going to have the one for sells. So the risk to reward ratio tool tells you what you are going to risk and what you are going to gain for what you risked. Now this can be moved, this can be adjusted. So you want to risk less amount of pips or points, you can move it up and down. You want to make more pips or points, you can move it up or down. Really depends on your liking. But if you're going to buy a trade, you have to have this tool right here so you can spot the trade when it's going to head up. If you're going to sell a trade, you need to use this tool so you can put out the risk to reward when it's going to head to the downside. Now, this risk to reward tool, this information here, it's very simple. It literally tells you exactly what you're going to risk in terms of points. So this right here, for example, is 164 points, and you're going to have a 250 point take profit, also known as pips. Let's say you want to risk less amount of pips. Usually people risk anywhere from 20 to 50 pips. This right here is where you can average out your pip sizing. For example, this would be a 40 pip stop loss for, let's say, a realistic 145 pip gain. So this is a solid 1-to-3 risk to reward ratio. Now this example right here is only to be used if you are buying a trade. So this right here would be a perfect example of you buying a trade, it hitting your take profit, and then you are out before it hits your stop loss. Same thing for the sells. If you want to have a small stop loss, you just want to have a 40 to 50 point stop loss. It tells you right here, 43 pips. You can make it even smaller, 27 pips, and you can have your take profit bigger or smaller. And same thing, you can put it right here in the chart and it's going to tell you where you got into the trade and exactly how you got out. This is very key because this is literally going to tell you when you're making money in the market and when you're losing money in the market. So this risk to reward ratio tools are very key and very important. Next, you have your brush. Brush is just if you want to spot something out, something extra, you really don't need it. I just like using it because when I do Zooms with the students, I'm always writing in the charts everywhere and I'm always pointing things out. So you probably might not need it. I just subconsciously put it on here. The next very important tool is going to be the rectangle. So this rectangle, again, you can put it up, down, you can put it however you want. But before that, let me show you guys the coloring. You can make the coloring however you like. I recommend you make it the colors that I have it, so we look at the same things when we're looking at the markets. This way, you can actually have a similarity to the way how I break down the charts. And this is by having the same risk to reward tools, the same candlesticks, the same everything. So I have a red outline, and then I have that color blue, which actually looks very nice because it pops. The red and the blue pop. Red candlesticks down, blue candlestick up, matches perfectly. So this tool is to be used to find areas of interest, supports and resistance levels. If you notice, this line right here has this level of support and resistance, but it's not perfect. If you notice, the line missed this point right here. It went a little bit over here. It didn't catch these bodies here. That's exactly what this rectangle is. The rectangle it's to bring everybody in together. You want to make sure you have something around this sizing with the line in the middle. So it's actually compacting everything. It makes it very clean because price is never going to always break an area, then come back and touch the exact number that you placed and then head to the upside. Very rare that that happens. Usually it hits a zone which has anywhere from 10 to 20 to 30 pips, and then it decides to move in that direction. For example, this zone right here, it's actually 30 pips, which is a solid zone for price to reach and then head to the direction that you're expecting to it. Again, keep in mind, we are on the daily time frame. So this is what this tool is used for. Usually you can see it on my charts pretty much everywhere. There are gonna be lines like this where you're gonna see it tap, you know, resistance, support, resistance, resistance, support, so on and so forth. And it's very important because this is what's gonna tell me when price is gonna break and retest the level of support so I can actually enter a trade. So this is probably one of my other most important tools, and it's very, very effective. Next, we have the circle. Circle is the same thing, whether you want to mark off an area where you want price to come into. I personally like using it when I'm also teaching, because this way I can I can literally show you what I'm looking at in the charts. So let's say I'm looking at this structure point right here. You know I'm talking about this structure point right here. Versus if I say, all right, you see that structure point right at the left shoulder? You have no idea what I'm talking about. Versus I say, this is the left shoulder, you know what I'm talking about. Also, it's just to remember certain things that happen. So let's say something happened here in my strategy that didn't work. Just put the circle there and I can come back and look at it whenever I want. Next is going to be the T. This T is actually the text. You can write here whatever notes you want, literally whatever notes you want that you can leave to yourself. It's going to be very important that you do this because this is what I actually use to write down my confluences every single time I enter a trade. And this is something that has been holding me accountable whenever I enter a trade, because I am literally writing down why should I enter, why should I not enter, what did I do wrong, what did I do right. And again, all of this stays here on TradingView. I can literally go to another pair. I can go to GBP USD for say, and come back, and all this is gonna stay here forever. It'll stay in the TradingView server. It's never gonna go anywhere. So this text is where we write down our confluences, writes down what we're waiting for in a currency pair. Literally everything is what's going to be used for this text, and you can use it as many times as you want for as many notes and as many messages as you want. Next is going to be the path, which I see you guys already see that I use it a lot. It's going to be just to line up market structure, gets you a really good feel of what the actual lines of the chart are doing. Again, once again, it's also really good just for noting. So these are all the tools that you're going to need from the actual tools to the left-hand side. Everything else here, pretty much pointless. This measuring tool is just to measure the amount of pips. So if you want to measure up and down, this would pretty much tell you how many pips it is and how many bars, which in this case it'd be 6 days. And it's a measuring tool. I've never used this magnet. I've never used this. I've never used this. I've never used this. It's just say you want to remove all the drawings temporarily, just go like that. If you want to bring it back, go like that. I've never found the need to do that. So everything here, we already understand what it is. Everything else up here, this would be these type of candlesticks that we are on right now. So we're on the Japanese candlesticks. You can favorite that if you want. You can come here, you go to the line chart, you can go to pretty much any type of chart you want, but we're only trading the candlestick pattern, so there's really no need to explain what all of these are. I have no idea what any of these are actually, and I never use them. Indicators, I don't really use mine, pointless, but there is a video on that as well if you want to know about it. Just click this video right here. I have a video explaining my EMA and how it works. Next is going to be this tool right here. I've never used this in my life. Next we have the alerts, which I can actually explain how that works. So let's say you want price to notify you once it reaches this area of interest. This is where you would put this little line right here. If you notice, if you get close to it, you see how there's a plus sign. So I would just come here, I would click the plus sign and I would put add an alert. So if I click that, you see immediately there is this alarm. So this is a live alarm. So as soon as price on Euro USD reaches 1.063181, it will notify my phone instantly. It will let me know that price is there. So alarms are useful because let's say you're waiting for price to get to this area in order for you to sell. So let's say you're waiting for something like this in order to enter the trade. It will notify you as soon as it reaches that point in order so you can pay attention to the chart and you can actually take the trade. So this example right here is very well useful because I use alarms all of the time. And that's the only reason I got the subscription on TradingView is because of the actual alarms. Because I think the free version, they cap you at 3 or 4. And then if you pay, you get way more. So if you want to remove the alarm, click that X right there, and it's going to ask you if you want to remove the alert. And yes, if you want to add it again, tap it, add it, boom, it's there. You want to remove it, hover over it, remove it, that's it. It's very easy. Next is going to be the replay. So the replay is used for back testing. I personally don't back test myself. I haven't done it. I don't encourage any of my students to back test. We only live test forward, because when you back test, you're almost kind of cheating because you already saw what price is going to do. So it's like you can't even pretend that you don't know what price is going to do right now. But it's a tool that you can, mess around a little bit with, and it pretty much plays price back in the future. It plays back price in the past, so you can predict what happens in the future, but we technically already saw what happened in the future. So to me, it's pointless. And then this point right here is like, let's say that we do something and we mess up on the chart. We simply just click this button right here and it takes us back. Kind of how it is with Microsoft Word, and whenever you're writing an essay, you just click back. All of these buttons up here, I never use them, never use publish. I never use any of these buttons over here as well. To me, all of these things are pointless. I never use this at all. I sometimes just use it to move up and down, just to kind of hide the pairs that I'm trading or not. But for me, this is useless as well. And same thing with down here. I don't use anything over here. I simply just focus on the charts, and that is it. Everything else here is extremely unnecessary. Only focusing on what matters, which is the actual charts itself. Okay, so now we understand what TradingView is. So again, TradingView is where you're going to simply analyze the markets. This is where you're going to mark up your trades. You're going to put your areas of interest, your alarms, your risk to reward ratios, where you want to actually enter the trades, where you're going to identify whether you want to buy or whether you want to sell. But now you're ready to take that buy, or you're ready to take that sell. So what do? Well, this is where you have to go to MetaTrader 4 and MetaTrader 5 on your phone, and then you have to download these apps in order for you to actually execute on these trades. And this is very key because these are the platforms that 99% of the market uses, and it is very simple and very effective to use it. I've been using them since I got started, and thanks to this platform, I'm able to execute to the market immediately. So MetaTrader 4 is, let's say, the iPhone 10. MetaTrader 5 is the iPhone 14. So for this video example, I'm going to be showing you this example on how to actually use it on MetaTrader 5, which is the latest iPhone. So there's obviously different ways that you can access MetaTrader 5. You can do it on your desktop, on your phone. I've always done it on my phone. It's the easiest and most accessible thing. And realistically, every single broker out there uses MetaTrader 4 and MetaTrader 5. You can't just go to MetaTrader 4 or MetaTrader 5 and send the money there. No, you have to use a broker, a platform, let's say oanda.com or IC Markets or forex.com. And those brokers, they connect your money to this platform. So you deposit your money into the broker, and once the money is in the broker transfers it into this platform, and this is where you actually execute the trade. So right now, what we're gonna do is we're gonna create a demo account, also known as paper trading. And we're gonna take trades in the live market. You can take trades in the live market with fake money, because this way you can test out your strategy, you can test out the broker, you can see the different market conditions that they actually have to offer. And that's what we're gonna do right now on MetaTrader 5. So I'm just gonna click on MetaTrader 5. And the first thing that it's gonna ask is open a demo account. So what we're gonna do that together. So we're gonna click open a demo account. As soon as you click that, it just creates your account. So you guys can see here, this is the quotes, the chart, trade, history, and then the settings. So right off the bat, they gave us $100,000 to trade. Obviously it is demo money. You can see at the top right badge up there, you can see how it says demo. So this is where you want to pretty much go to the quote section, and then here you are able to freely take the same trade that you were analyzing on the actual TradingView. If you notice, the first currency pair is Euro USD, which is the first one that we were analyzing on TradingView. The second one is GBP USD, and the one that we were identifying the trend is USD JPY. Let's say you want to add another currency pair that you happen to find. Simply just click on the search bar and then you type it in. So let's say GBP JPY. Click that little green button, and now it is automatically added to the bottom of your watch list. Let's say you want to remove some pairs. Let's say you want to remove these pairs right here because for some reason you simply don't like them. You click the pencil at the top right corner, you tap them, and then you click on the garbage can. But don't worry, that doesn't mean that they're gone forever. If you want to get them back, search on the search bar, and then you can literally just add them again, and they're back on your watch list. So this is the main section where you can see the different types of currency pairs and where you can actually execute it. So you were to tap it, you can click trade, chart, details, statistics, depth of market, all of this stuff. But realistically, the only button you're going to use here is going to be the actual trade button. It's the only button you need. I've never used any other button from here. I've never used the chart. I've never used the details, the statistics. I've never used none of that stuff, and it is completely unnecessary in my opinion. Like I'm always saying, less is more. So let's say you actually want to execute a trade, you would click trade. But before we get to that, I just want to show you what every single other button means so you're up to speed. Next is the chart. So if you notice, this chart is the same one that we were looking at on TradingView, but you notice it looks uglier here. Now, you might be asking yourself, why am I analyzing the charts on TradingView and then taking it on MetaTrader? Why don't I just analyze the charts on MetaTrader and taking it on MetaTrader? And that simple answer is, it's because MetaTrader charting platform is very outdated. It's very whack. It's very tacky. So this is why you want to use TradingView, because it is the new and the latest version of charting. You have alarms, everything looks so much more clean versus on MetaTrader 4, MetaTrader 5, it's very outdated. So this is why we use TradingView to analyze, and then MetaTrader 4 and MetaTrader 5 to actually execute the trade. So here you can just see the charts, but it's pointless. I never look at the charts through here because I always look at the charts through the actual TradingView platform. Next is the trade. So whenever you actually execute a trade, you can see the floating price of the account. You can see your balance, your equity, and the margin that you currently have on your account. And then you can have your history. So here you can, sort out your history from, let's say, the last 6 months, the last 3 months, the last month, custom, however you want. This is what you present to investors. So you can show them, hey, look, I'm legit. I know how to make money trading. Give me money so I make money for you. And then all the way at the right is sensitive information. This is where you can see your account number. You can see what broker you're using, create a new account, so on and so forth. I never use any of the buttons. I don't use the mailbox, the news, the trade days, the chat, the messages, traders community, the interface, the charts, the journal setting. I didn't use any of that stuff ever. The only thing I ever do is I either click on the top button right here, which is on the actual MetaTrader. And let's say I'm going to create a new account, or I'm logging into a new account. I would click the plus button. I would search up the broker. So let's say I'm using Oanda. I would search up the Oanda server. Once I click on the Oanda server, then I'd put the login number, password, and then I'm logged in. If I wanted to be a live account, so on and so forth, I do that then. But I don't use any of these other buttons. Like, it's all extremely unnecessary. So let's go back to the quote section, because we're going to actually take a trade together right now. So let's say the USD JPY trade, the one that we were just breaking down right here, the one that I was analyzing to buy to the upside. Let's take that trade together right now. So if we were to take USD JPY together, I would simply click on USD JPY, and then I would click trade. It's going to take me to this option right here where I can immediately enter the trade. Again, keep in mind, you are not going to be using the chart, the details, the statistics, or the depth of the market. None of that stuff is necessary, only the trade button. Once you click trade, it's going to give you the option if you want an instant execution, buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit, none of that stuff. You are immediately going to enter the market as soon as you click that buy or that sell button. Now, this is very key because you need to be very careful with clicking that button, because as soon as you click it, you're in the market. It can be a big mistake if you put the wrong lot size. So right under instant execution, you're going to have your lot size. So as of right now, we are risking 0.50 per trade. And that decimal point always moves 1 to the right, meaning that that is what you're risking. So if you were to move that decimal point 1 to the right, you're risking $5 per pip. So if on the USD JPY trade, we had a 20 pip stop loss, you can pull out your calculator. It's very simple. You have 20 pips times $5. You're risking a total of $100 on this trade. If let's say you want to risk more, let's say you want to risk $7 per this trade, you would put 0.70, because again, that decimal point moves 1 point to the right always. So now you would pull out the calculator, you would put 20 pips times $7 equals $140 you're going to be risking. Now let's say you want to up your lot size. Let's say you want to risk 1.50. So now this is not 1.50, this is actually $15 per pip. So again, the decimal point is going to move 1 point to the right, and this is where you're going to be risking $15 per pip. So again, let's do the same exact example. Let's say we are risking 20 pips, and now you're risking $15 per pip. You're now risking $300 per trade. I'm sure you guys get the memo. So whatever you're willing to risk, you can just pull out that simple calculator. It's very simple, right? So for this example, let's go a little bit bigger, right? It's fake money, it's a demo. You can go as big as you want. So let's simply put 20.00. So this means that we are risking $200 per trade. Again, the decimal point moves 1 point to the right. So if we're going to be risking $200 per trade, we're going to come here, we'd put $200 per pip times 20 pips. That equals $4,000 that we're risking on this trade. Our stop loss points, this is where we would go to our stop loss on the actual TradingView chart, and then we would identify where is it that we want to put our stop loss. So for this example's purposes, we're just going to simply put a round psychological level, looking at it here on the chart, and we have 149.000. And then our take profit, let's just put it at 1.52.000. So now that we're ready to take the trade, you just click request. It's going to actually give you the live updated price. So now for this example, let's click buy. So we're going to click the buy, and then we are immediately entered into the market. So you guys can see right there how we are already immediately in a $100 loss. And just like that, we are in the live market. Now that $100 loss isn't because the price moved down, it's simply because that's the cost of doing business with this broker. So as of right now, this trade is in the live market. We are now down $212, which is very normal because it's just the fees of the broker. And this is where we would see our trade floating in profit. So if you were to tap the trade, if you were to want to close the position, you'd click close. If you'd want to modify the position, you'd click modify. And those are the only two buttons you'd actually click. But I only recommend closing the position when you are actually in profit. So right here, you'd have to obviously request the live price because price is always moving. And then you would have to close price right there at $150 loss. So this is actually what happens when you enter a trade. You're gonna immediately see red, but it is more than normal. Now, obviously what we have just done is just taken a trade at random. We didn't really go into depth in the actual analysis. Right now, it is currently 8:45 p.m. EST, and we are not trading in a trading session. So that is not according to my plan. So now we're gonna dive into the topic of actually having a solid trading plan. Because if you just take trades like that, crazy, the market spreads are going to eat you. You're not going to be trading when there's a lot of volume in the markets, and you're not trading with a plan, so you're simply not going to be successful. So this is all just an examples purposes, just so I can show you guys exactly how you analyze the charts, how you enter the trade. But now let's actually talk about a day trading plan. So now your plan has to consist of many things, and you cannot not have one of these things in your trading plan. This is almost like an engine of a car. You need everything to work perfect in order for the car to run. You need the alternator to cool the engine. You need the spark plugs to ignite the pistons. You need the oil so it smoothens the way the pistons work. You need the gas so you fuel the engine. You need the transmission so you move the car. You need the wheels so the actual car moves. Like everything is needed for the car to move. You cannot have one of these pieces out because then the car won't run. It's the same thing with this trading plan. Everything has to be there perfectly in order for this trading plan to execute and for you to become profitable. Do not try to find any shortcuts because it simply won't work, and it's going to cost you a lot of time and you're going to waste a lot of money. So the first things first with any trading plan is you need to have a set risk percentage. What are you willing to risk of your account? Whether it is going to be a percentage, whether it is going to be a dollar amount. Stick to that percentage or stick to that dollar amount every single time. I always recommend percentage because percentage moves with the dollar amount of the account. For that trade that we just took right now, we risked $4,000 on that trade. $4,000 on the $100,000 account is simply 4% of the account. So that should show you that you should focus on percentage and not dollar amount. So risk the same percentage every single time. That is supposed to be your #1 rule with your trading plan. Next is going to be the operation hours. So there's different sessions in the market. You have Asia session, you have Tokyo, you have New York, London, and then you have an overlap of New York and London session. You should only be trading New York or London session, or a little bit before London, or a little bit before New York, but never after New York because there's simply no volume in the market. This is very key because you're entering the market when there's movement, when the market is going to hit your take profit a lot faster, when the market is going to move in that direction a lot faster. Right now, it's 8:48 at night. we are far from London session. London session starts at 3 a.m. my time. So I just took a trade 6 hours in advance of a session. So that means that this trade is going to be floating in live market price for the next 6 hours before any actual volume kicks into the market. And that's going to be beating up my account until London session hits. And we're currently down $500 on that trade, simply because I didn't take the trade at the right time with the right volume. Next, you need to have a maximum of trades you have to take every single day or every single week. This is a rule that I wish I knew early on so bad. It would have saved me so much time, would have saved me headaches, because I didn't know when to stop. I didn't know when to call it quits. I didn't know if it was right to call it quits at 5 trades a day or 10 trades a day. I didn't know what was right from wrong. I don't recommend any trader out there to take more than 2 trades a day. Now, it's very hard to say that when I made that mistake at the beginning myself, but the reality of the situation is that if you take more than 2 trades a day, you're simply not going to be successful in trading, because you're not taking logical trades. There's no way that the market is giving you a high probability trade setup more than 2 times every single 24 hours around the clock. It's impossible. It's not going to happen. This week alone, I haven't taken one single trade, and it is currently Wednesday, this whole entire week. So you should not be taking more than 2 trades a week. This is very key to your strategy, because once again, it's going to save you a lot of time from being in front of the markets doing nothing, and it's going to save you a lot of money from taking trades that simply don't make any sense. Don't make something out of nothing. Don't get FOMO. The market is not going to go anywhere. I can guarantee you that. And this is a rule that you have to establish and not break it. And whenever you do break it, there has to be a consequence for it. Whenever I break my rules, I have a consequence. I hate not being able to eat sweets. I love my sweets after dinner, randomly throughout the day. But if I break my rules, I can't have sweets for 1 or 2 days. Now, it might sound funny, might be, sound like a joke, but that bothers me. I want to have my sweets. Why can't I have my sweets? And that's the consequences that I pay for breaking my rules. So you should do the same thing. If you hate cold showers, whenever you break a rule, go take a cold shower. I can guarantee you the next time you're going to think about breaking your rules, and think about how bad that cold shower is going to feel. And if you break your rules and you don't take that cold shower, well, you're only doing damage to yourself, because you're not holding yourself accountable. You're being fake to yourself. So if you break a rule and you brush it off and you pretend like nobody saw, you're right, nobody saw, but nobody cares, because you're not the one that's going to be successful. Like, nobody cares that you broke them. They're going to let you do you. You need to hold yourself accountable whenever you break rules, and have rules that are unbreakable. And if you do break it, there has to be a consequence. And again, these are things that I wish that I knew so early on into my journey. It would have saved me so much time, and I'd probably be on a mega yacht right now. Who knows? I would have saved 2 years of straight losses. So with all of this information, it might be very hard to track it, right? And these are just some of the small rules that I teach my students every single day, because I get on a call with them every single week and I preach this every single week, every single day. Like, I'm very hard on them, so they stick to the plan. This is only the beginning. There's so many other things that are needed for this to work. I just gave you the main key components of the engine of the car. I gave you the wheels, I gave you the engine and the transmission. Now you need the fuel, you need the oil, you need the coolant, you need the spark plugs, you need the wiring harness, you need all of this other stuff for the car to actually function. You need the details. I have just given you the big car as a whole. I've given you the mass, the main things that you need to actually make it in trading. Now, it's up to you to actually learn the details on how to make that car run. And as you're making this car run, as you're trying to put the coolant, put the wiring harness, put all of this stuff, you might make mistakes. You probably might not want to make them again. That's why I recommend you journal. Every single trade that you take, every single thing, everything that you do has to be journaled. And sometimes it's very hard for you to keep track of that yourself, because you either get lazy or get emotional. So I recommend you always connect your account to a MyFX book. So myfxbook.com is a very well-known platform, one of the biggest in the industries as well. You just connect your account into the MyFX book account, and then there you are simply able to then now track your trades. And you're not able to track your trades by yourself. The platform does it for you. It tells you your win to loss rate. It tells you your risk to reward ratio. It tells you how long you last in a trade. It tells you the most pairs that you trade. It tells you the sessions you trade. It tells you what you do. It tells you everything. It tells you more about you than you know about you. And this is very key, because it's going to track not only your performance, but it's going to track your mistakes. And you can go back to the chart and you can notice these mistakes and you can learn from it, and then you can continue to not make those mistakes and capitalize off of them. And this is something that I didn't do for about 1.5 years. And as soon as I started to do it, I completely started to shift my journey, because you're seeing the same mistakes happen again and again and again. And you don't want to keep taking that cold shower, so you're gonna learn from it. But sometimes it's hard for you to remember what caused you to take that cold shower. So that's where you have these tracking devices, and there's many out there that are very well and they're very great. I just personally always use the first one that I was introduced to, which is my FX book. And once again, it took me a while to find out that platform and what they're able to do, but I'm transferring this to you guys so I can save you guys the time and just put you guys on. So at this point, I have explained to you the key parts to having this card built. I've explained to you where you go analyze the markets. I've explained to you where you execute the trade, where you deposit the money, what rules you should have that are unbreakable, where you track your trades, every single tool that everything. I've given you the full tutorial on how to day trade. Now, obviously, you need to now have a strategy. You need to have something so you actually follow every single day. That's why I have students that are generating anywhere from $1,000 to $1,500 a week using my set and forget strategy, literally every single week, because they get on a call with me and I mentor them. I give them my top 3, top 4 pairs for the week. I'm in the Discord answering questions. They're in there with other successful traders that help them and guide them to take the best trades possible. And I encourage you to do the same as well, because the community has gotten bigger than ever, and it's letting traders make anywhere from $1,000 to $1,500 a week using my set and forget strategy. So now that you have the key components to now see what this card is actually capable of doing, now all you're missing is the strategy in order to actually be able to get this card to run and take you to success. So I hope you guys have found this video useful. If you want to know more about me, want to know more about the set and forget strategy and how these students are generating numbers like these or like these, click the link in the description below. I have a video for you there that explains what set and forget is actually about and the truth behind the set and forget strategy and how it's gotten me to the point where I am today. So appreciate you guys watching this video all the way to the end. Make sure to hit that like and subscribe button, and I'll see you guys in the next video.